Hi, I'm Doug Lyons from Oceanic Capital Management. Welcome. I get asked all the time, should I convert my IRA to a Roth IRA? I also get asked when and how much. It's a complicated issue, so let's take a look. Before we go any further, let's talk about the similarities and the differences between an individual retirement account or IRA and a Roth IRA. An individual retirement account you can contribute pre-tax dollars to, and all the growth that you get on it is tax deferred. The investment options are numerous. You withdraw before 59 and a half and you're going to get penalized. There are some exceptions to that. And when it comes out, it's all taxed as ordinary income. Withdrawal after 59 and a half, there's no penalty, but it is treated as ordinary income. And then now, under current law, you are required at age 73 to take required minimum distributions, or what's referred in the industry as RMDs. A Roth is a little different in that you're contributing after tax dollars up to certain limits. The growth is tax free. That's the biggest difference with a Roth. Again, investment options are numerous as they are with an individual retirement account. Withdrawals before 59 and a half are penalized, again with some exceptions, but the growth is taxed as income. Withdrawal after 59 and a half, tax-free, provided the account was opened at least 5 calendar years. Big advantage again with a Roth is there's no required minimum distributions or RMDs. So why convert? Well, some of the advantages of converting your IRA to a Roth are on the left-hand side here. Tax-free withdrawals. That is probably the biggest advantage. No required minimum distributions like there are with individual retirement accounts. And tax rates may be lower now than in the future, whether it's for your personal situation or the government changes the tax laws. So you're better off paying the tax now than paying the tax later. Some of the disadvantages, the amount converted is taxable income in the year that you convert. If you're not careful, it can bump you up into a higher tax bracket for that year you convert. You can't undo a conversion. So for instance, if you converted at the beginning of the year and the asset value of that, whatever it was invested in, drops, you're actually paying tax on a higher value at the time you converted than if you had waited and converted at a later date. The rules could change. Congress has talked about changing the rules regarding the tax status of Roths. They haven't done so to date, but that's always a potential downfall. And you have to wait 5 years after conversion to take a distribution to avoid penalties, and that is after each conversion. So does converting your IRA to a Roth make sense for you? It's a very complicated issue, but generally speaking, if you believe your taxes will be higher later than they are now, then it makes sense to convert and pay the tax now. If you have cash to pay for the tax on conversion, that makes sense. You don't want to pull it from the amount that you're actually converting. If you won't have a very large tax liability on the conversion that year, then it might make sense. If you have an account value that has lost money, then it may make sense to convert now and anticipate that asset to grow later as opposed to converting later on a higher value. And if you won't need the money that you've converted for 5 years, it makes sense. But as I said, it really depends on every individual situation. We like to do an analysis to determine if it makes sense for you. We're able to show our clients how much more money they'll have at the end of their retirement by doing one or multiple conversions. In this example, this client generated over $161,000 more by converting monies now and paying less taxes. Thereby, the red circle shows pulling less money out of deferred accounts and pulling more money out of tax-free accounts. So if you decided to convert, the next question that we always get was, well, how much should I convert and when should I do it? Or where should I do it? Those are questions that, again, are very individual specific, and we have to run an analysis. Here we have an analysis that we run for clients, and it tells you exactly how much you can convert or should convert each year while minimizing your taxes in that year. It shows the withdrawal from the different accounts, so you know exactly where that money over your retirement is going to come from. We find that this really helps people understand the financial implications of converting and where their money is going to flow from in retirement. So if you're wondering if a Roth conversion makes sense for you, please feel free to reach out to me. You can email me at dlyons@oceaniccap.com, or you can give me a call, my direct number, which is 732-673-3549, or you can always check us out on our website at oceaniccap.com. Thanks for watching.